I've never been in an accident, no speeding tickets, nothing. So why is my car insurance so expensive? If your driving record is spotless, but you're still paying sky-high insurance rates, your credit score might be the reason why. In most states, insurers use something called a credit-based insurance score to decide how risky you are to insure. It's not your credit score exactly, and sometimes it might be called a customer rating index, but it's usually made up of the same stuff. Here's an example of a filing for Pennsylvania with State Farm. They use a customer rating index. And you can see here that if you have a customer rating index above 1600, you actually get a discount. Below that, they're charging you more. What makes up your score? Well, nobody really knows. It's confidential.
Shh.
Insurance companies calculate these proprietary scores and say that drivers with lower scores are riskier to insure. In some states, even if your driving record is spotless, this score could double your rate. Now, here's where it gets controversial because this is correlation, not causation. These scores often reflect economic hardship, not actual poor driving. And you can argue that these scores punish people who are struggling economically, even if they're responsible drivers. And that's why New York State lawmakers are pushing a bill that will ban insurers from using credit scores to calculate insurance rates. And they are not alone. California, Hawaii, Massachusetts, and Michigan have already banned this practice. Oregon and Utah have put limits on it, and Washington and New Mexico are considering bans too. So yeah, your premium might not just be about how you drive, but also about how you borrow and pay your bills. Do you think that's fair? Let us know in the comments, and let me know if you want part 2 where we'll talk about how to lower your premiums if your credit score is making your rates high.